we have quite a complementary business model here where we've got these sort of media platforms or ad networks, if you will, that are sort of the profit centers. And then you've got these scalable global tech plays. And it's catching up. I think we mentioned in our half yearly report for the first time in December, the tech side of the business actually did more in turnover than the media side. So that's really exciting.
Good afternoon and welcome back to the Proactive Studio. I'm Jonathan Jackson, and joining me today is Vinyl Group CEO Josh Simons to discuss the company's financial growth and recent acquisitions, including the acquisition of the well-known Concrete Playground. Josh, it's nice to meet you.
Nice to meet you too, Jonathan. Thanks for having us on.
It's a pleasure. Now, before we get into the numbers, which have been really good lately, and that acquisition that I just mentioned there, can you give us an overview of the company and what you're all about?
Vinyl Group I was trying to think about this earlier today, like how would I describe it in one sentence? I think we make cool things for the music ecosystem. But we also provide, or I guess create or buy in some cases, essential things for the music ecosystem. And I use the word ecosystem because we're not just talking about musicians or fans, we're talking about anyone who sort of is involved in culture, if you want it to be a bit broader than just music. And so that's why you sort of see us dabble in e-commerce, media, tech platforms, but that's in a nutshell, that's what we do.
And Josh, you're a music fan, I'm guessing.
Well, there's a few guitars in the back, so I used to play a lot, yes.
So let's get into the nitty gritty. You've just released your H1 financials. Talk us through those. There was a 770.2% revenue increase for the half, and there are other great numbers in there. Can you talk us through the numbers and what you believe has been the focus of that increase?
So I think probably the number I'm most proud of is the sort of increase in our revenue, or annual revenue run rate from 2 million to 20 million. Look, we're getting on with what we said we'd do. And when I first came into what was once called Jackster and is now called Vinyl Group, and we announced a fairly aggressive acquisition strategy, there was going to be a period of expenditure followed by a period of probably costs, but I'd call them investments in the future by reducing, various parts of. I'm trying to think. When you integrate any companies, there's going to be some reductions, right? But they're investments in the future, and then once you get that through that period, the prospect then is a profitable company, and that's sort of the pathway that we're on. We've always been clear that we would like to get there by the end of this calendar year, certainly within the 26 financial year. But that's the pathway that we're on, and the numbers in this half yearly report that came out, I think, show that we're just getting on with the plan as promised.
And those numbers have also helped greatly improve that market capitalization as well. Can you talk me through
Yes.
the change in that market cap and what that means for the company too?
Well, we issued a fair bit of stock last year. We did that to obviously pay for the acquisitions. Most, I think, importantly and crucially, is that when we issue stock, we certainly did through last year, give existing shareholders the right to participate. So we try to do it in as least dilutionary way possible, but it does mean, to your point, yeah, the issue of new equity, and that does push up the market cap. Obviously, we're buying assets along the way as well, so it's sort of, I think it's justified, and it's not a crazy revenue multiple that's been applied to the company. So the market's obviously going to decide that at the end of the day, whether that's sustainable or justifiable or not. But the market cap has steadily increased over the course of the last year.
And one thing I guess that will help the revenue further is that acquisition of Concrete Playground.
Yeah.
Talk us through the strategic benefits to Vinyl Group of that.
So the acquisition of Concrete Playground was an interesting one. They approached us, and it doesn't, and I think at first look, seem a super logical fit. But as soon as we started getting in and did a bit of a deep dive, what we saw was that most of their business was coming through the same agencies we were already dealing with, but they were servicing a very different type of client than we can through our existing platforms. So what you've got there is a 1 + 1 = 3 type scenario where you bring the business into the infrastructure that we've got with the sales team that we've got, the back office resources that we have, and we benefit from new clients that we otherwise wouldn't be able to reach. So that revenue of, I think it's $4.1 million, the profit on their side when it was a standalone business was nothing, incredible to write home about, but under our sort of one roof, we'll be able to really extract a lot of profit out of that one, and it should really help to accelerate our plans to get to profitability on the group level.
And you're really building an ecosystem here. So Concrete Playground is part of that. Genius as well. You've acquired Genius there.
We didn't
Um,
acquire Genies. That's just an ad rep deal. Part of such an important part of our business model is our ad rep business. And so that's where we have other publications that we don't actually own, but they're part of our network. And so when we sell, well, when an agency comes to us and says Adidas wants to do a campaign and they want to be on this type of website, we don't just have to be limited to the websites that we own, which we do own quite a few. I think we own about 8 or 9, but we can then also go out to extended ad network, and that's 50 different websites. And that extended network actually reaches 10 million Aussies every month. So we're really tapping into a much larger market by doing these ad rep deals where you don't have to own the asset. The real learning there, though, is replicating that model overseas, and no one's really doing it in the music space, at least anywhere else in the world, as far as we can see. So that's the opportunity for the business moving forward.
and as you say there, I guess that's part of the group's key expansion plan. Um, how do you aim to achieve, I guess, that global expansion and profitability beyond this year and into next?
Yeah. I think through our tech platforms, right? That's where sort of we have quite a complementary business model here where we've got these sort of media platforms or ad networks, if you will, that are sort of the profit centers. And then you've got these scalable global tech plays, and it's catching up. I think we mentioned in our half yearly report for the first time in December, the tech side of the business actually did more in turnover than the media side. So that's really exciting because they are global players. I mean, Vamper was a network that was started in America and is predominantly used by Americans. Vinyl.com, the biggest market is North America as well. So a lot of that tech stuff that we do is already kind of centered and based over in the States. Um, there's work. There's opportunity rather with taking the ad network learnings to my point earlier and rolling them out in different territories. And I'm looking forward to doing that. We've sort of sowed the seeds there. We announced it a few months ago, the Vamper Ad Network, which is going to be a replication of what we did at Vinyl Media overseas. And we haven't had many updates since then, but I can assure you that there's work going on in the background.
There seems to be plenty going on. Talk me through. I mean, technology in music is always changing, and you guys are now at the forefront of some of that change. How do you view, I guess, that technological change and what it means to music?
Well, it's a symbiotic relationship. Without technology, you don't have music. So if you think about how music is delivered in even the earliest forms of music and the gramophones and then vinyl players later on, it's all technologies that actually make it possible for people to record one sound and then reproduce it somewhere else and then ultimately enjoy it or get stimulated by it or have some kind of visceral reaction to it. So music can't live without technology and so it's a funny one because technology has also been the direct driver for some of music's darker days where a lot of revenues bottomed out of it, which was obviously through the late 90s. And I was a working musician through that period, so I really felt the crunch there. I mean, there wasn't almost any money to be made for anyone. Obviously, we've bounced back from there, and technology's been a part of that with streaming. Interestingly, vinyl's making a huge comeback. We just had the sort of annual Luminate report that we all in the industry look to for year on year sort of growth. And I saw today that there's been another year of growth in the vinyl sector as well. So it's a funny old thing, technology, but generally speaking, I like to be at the forefront of it. I'd consider myself an early adopter. I'm just looking at, you can't see in front of me, but all the gizmos and gadgets that I've got from various emerging music tech companies that send me inventions and things like that. And it's such an exciting space. And when you get it right, when you provide real value, and hopefully across our suite of businesses we do, you do make yourself indispensable in an industry that is vital to culture, and that's what we're passionate about. Doing is creating those tools and operating them.
Yeah, yeah. So what's next for the company?
World domination. No, I think we've got to deliver on our promise to optimize, get profitable. I think once we do that and once we show that we can come good on that, then we'll be a little bit more freed up to consider some more ambitious plays and keep growing from there.
And Josh, just finally, the investment case. If investors are looking at Vinyl Group, what are they looking at?
I think, I mean, I'm an investor myself. I always sort of I learnt rather from the VCs that invested in me early on that you should look at the lines and not the dots. And I think, I've been in this job for nearly 2 years now as a public company CEO, and I'd like to think that I've established a pretty good track record of, and just look at that revenue graph in the half yearly report. I think, look at the growth of the share price, look at the growth of the market cap, et cetera, et cetera. I'd like to think that I've established more than just a few wins and dots, and there's a few lines there that you can start to draw. And so that would be my case to investors, is have a look at the track record.
Josh, good luck in the near future and the far future as well. And thanks for your time today.
Likewise, thank you.